And go over to the bond market now. Our next guest says the bond market rally appears to be losing some steam as yields bounce back from year lows. Michell joins us from FIIG Securities in Sydney now. Simon, thanks for your time, really do appreciate it. Let's talk about the factors behind that rally that seems to be dissipating.
Yeah, absolutely. So we've had a fairly significant rally in bond markets globally as people search for yield, and they've moved down the credit spectrum in that search. That seemed to teeter off a little bit overnight, essentially, and yields popped up a couple of basis points. Look, I mean, as you mentioned, they've been touching year lows. Interestingly, the US 30-year Treasury's down about 70 basis points since the start of the year. The 10-year is down about 60 basis points. Our Commonwealth Government 10-year bond is down about 60 basis points. So, yeah, that's significant moves, considering that we have been in an environment where we have seen the US pulling back on its monetary policy stimulus.
Yeah, and so that brings yield spreads down to the lowest level since April 2010, is that right? Yeah,
that's an interesting one. Credit spreads, the risk premium essentially that you get as you take on more risky bonds has breached the previous low of 88, down to about 86 basis points. So that's back at April 2010 levels. Very, very significant. Now, what does that mean to the market? Well, I had a look at the Qantas senior bond issue that came out about 10 days ago. This was the first issue with their non-investment grade rating of BB+. That was initially issued at 400 over, 300 million issue, and that is now trading much tighter at 368 over. So it's a 30 basis point tightening in 10 days on that deal.
Let's talk about some of the other issuances around at the moment and what they make of them. What have you got your eyes on?
Well, obviously with these tighter credit spreads and lower yields, issuers are taking advantage, and there's very, very strong demand out there. So we've seen a lot of issues come through to the market. We had an Abbott Point coal terminal last week. We've had AMP come to the market. The one, as I refer to my notes, is AIL has done an issue in 2 tranches, one for 3 years, one for 6 years. So, look, great for investors. They get an opportunity to access these companies, but a great environment for issuers to get this debt away.
Yeah, absolutely. Michell, thank you very much for joining us.
Thank you, Kate.
Simon joining us from FIIG there in Sydney. Well, we certainly have a very busy week ahead economic-wise for the local economy. On Monday,